All right, everyone, welcome to another day of the $1 million trading challenge. Today is January the 19th. It's a Monday today. The markets are actually closed, so hopefully you guys are enjoying your holiday. Just want to go over exactly my TradeZilla stats for the month so far. My overall thought process of my first 2 weeks of trading, what my game plan is coming to the last 2 weeks, just really my statistics and everything that I think you guys will find value. So let's head on to my TradeZilla statistics for the month of January so far. So as you can see, currently I'm up $52,000 for the month. Trade win percentage 66%. 8 wins, 4 losers, profit factor 7.72, day win percentage 88%, and my average win to loss ratio is about 3.86 win to loss ratio so far. As you can see, my statistics for this month for the first 2 weeks have been absolutely fantastic. Normally speaking, right, my statistics don't normally look like this. 66% win rate is on the higher end. Usually I'm anywhere between, right, 40 to 60%, depending on the overall market conditions and depending on how well I trade. Of course, profit factor is quite high right now just because I haven't taken too many losses besides the first day of the month that I traded. Day win percentage, that's something I don't really track normally, depending on the months and the conditions, right? I don't really look at the day win percentage quite often. The main things here is taking a look at the trade win percentage, of course, and the average win to loss ratio. So in this case, the average win to loss ratio is about 3.86. My average winners in this case are 7.2 thousand compared to my losers, which is about 2,000 per trade. So this is quite high here as well. As I mentioned, for my trade win percentage, anywhere between 40 to 60%. As for my average win to loss ratio, this is usually anywhere around like a 1 to 2. So it's around a 1 to 2 risk to reward ratio. And then sometimes if I'm trading well, it can be a little bit higher, potentially like a 1 to 3 risk to reward ratio. So right now it's almost at a 1 to 4. So of course that is fairly high, and that's why I've been trading fairly well for the first 2 weeks of January. As you can see, the first red day that I had was on the 6th, and ever since then basically I've had a really nice push, and that's what my graph looks like so far with very minimal drawdown. I basically won every single day after that first loss we had on Tuesday, on the 6th. And then ever since then, yeah, as I mentioned, really solid push higher. This is what my P&L graph looks like. I am expecting a potential mini pullback or a couple red days here fairly soon. But we'll see how the month ends off. But so far, fantastic month. On week number 2, ended up making $25,000. And then, of course, on week number 3, $27,000. Really only trading 1 to 3 trades a day. The last week, I actually only took one trade every single day on this specific account. So I do want to mention this is my day trading options account. I do some swings every once in a while on this account, but that's primarily like day trades turn into swings. So this is just strictly my day trading options account that I trade intraday. This isn't including swings, any position trades, or any sort of long-term investments. This is strictly for day trading, and this is why I have that $1 million challenge. That is specifically for this day trading account. So as you can see, really been only taking one trade a day. There's been quite a bit of opportunity in the market. So there's nice volatility. Of course, we just had the tariffs, of course, that we had announced over the weekend. So I do expect more volatility, of course, with Trump tariffs back on the table. So that should be exciting. As you guys know, we've had this a couple times in the past few years. Whenever we have the Trump tariffs, the markets usually are quite volatile. There's usually no clear direction, but to be fair, we haven't had a clear direction on the QQQ for the better part of the past 2 to 3 months. A lot of the names that have been moving nicer have been names in the IWM, right? High beta names in the SMH. Those are really what's been moving nicely and what we've been looking at specifically in the past 2 weeks. And yeah, let's hop kind of into the charts. I do see some of you guys always asking as well, some of the setups that I do take. So I go over basically all my setups that I take on a day-to-day basis. Today is just more of a kind of a recap and the overall thought process of the month and what I'm expecting for the next couple of weeks moving forward. I just kind of want to talk about some of the setups I've been taking lately as well. So I see some of you guys talk about my strategy. As you guys know, I do trade the break and retest. This is my bread and butter. And the primary setups that I trade within the break and retest, of course, is the previous day highs and the previous day low retest. We also have the opening range break and retest. This can be on the 1, the 5, or the 15-minute time frame. And then we also have the order block retest, which is one of my favorites. So these are the primary setups, the primary 3 setups that I use on a day-to-day basis. And we've also been using, right, there's plenty of more break and retest. We also have been using the pre-market high break and retest quite often lately. And I'll kind of explain why, just because we are at all-time highs. But usually these are the primary 3 setups that we have: previous day highs and previous day lows, opening range, plus the order block. One of the more common questions I get asked is, when should we use the 1, 5, or 15-minute time frame? This is really context based. In some markets, the 1 and 5-minute work better. In other markets, the 15-minute works better. Lately, and what my favorite is personally the 5-minute opening range break and retest, just because a lot of times when you are using the opening range, you want to use it when there is some sort of higher time frame thesis. So if we have, let's say, for example, the 5-minute opening range and we're bullish on the higher time frames, usually that first 5 minutes is going to be a key indication on where price wants to head for the day. Let's go on to, for example, Intel. This is a trade that we ended up taking. This was on Friday, sorry, this was on Wednesday of last week. So Wednesday of last week, if we're looking at this, we had a higher time frame thesis. If we just zoom out, as you can see right here, where higher lows are being built, we had some news. So we're expecting Intel to push higher with, right, the overall semiconductors. You can see within the first 5 minutes, this is a telltale sign that price is most likely going to continue higher. You can see huge first 5-minute candle. Let me actually remove this. As you can see, huge first 5-minute candle right off that previous day highs. And this is usually a good indication that price is going to continue higher. So this is a great example of when to use that opening range, is when we have some sort of higher time frame thesis. And you can see strong buyers. And if I had the volume pulled up here as well, you can see there's going to be a lot of volume within that first 5-minute candle. And now we can expect most likely continuation towards the upside, just based off the overall context. When we don't want to use the first 5-minute opening range, and maybe the first 15-minute opening range, is maybe when we're in more of a consolidation. So let's say, for example, we're on the QQQ. As you can see, the QQQ in the past, I'd say 2 months, we've primarily been inside this consolidation period. If you kind of drag this over, right, you have your 628 all the way down into that 618. Of course, we broke underneath it here, but we've really just been ranging in this general area. If this is the case, we don't really want to be using the 5-minute opening range or the 1-minute opening range specifically, just because we're in a very tight range here in the market. So want to be using the 15-minute if price is in sort of consolidation, or if it's a little bit choppier, the 1 and 5-minute if we have some sort of opening range thesis. The other setup I wanted to talk about here was that pre-market high. So this is something I don't use as often unless there's some sort of other confluence or there's no other levels. I'm going to be using the pre-market high retest, right? This is not something I normally look at on a day-to-day basis. Let's say, for example, the QQQ, like this pre-market high, or maybe these pre-market highs. Usually there's not as much volume in these pre-market levels, and I'm not going to use them as often. But let's say, for example, we have some sort of higher time frame thesis, right? Something like MU. Right, there is no other levels usually above your previous day high. So we're going to have to use our pre-market highs in this case, right? Something like MU, right? Pre-market highs are going to be key levels. You could have traded off your pre-market high reclaim here on Friday. That was one of the setups we talked about, right? On this day, you can see you kind of had that pre-market high rejection. So whenever we are at all-time highs, we're going to be using levels that's available to us. So in this case, if there's no other information to go off of, let's say your previous day highs is very far away, right? We're going to have to use our pre-market levels, because let's say we remove this if we're going to be looking for that previous day high retest, which is something we look for quite often, right? Could price come back down in towards that previous day highs? It could, or it can, right, just gravitate up and towards your pre-market highs. And you can see within the first 1 minute, right, it was already back at your pre-market high. So in this case, we're going to have to use those pre-market levels. So pre-market levels have been used quite often in the past couple of weeks, just because, right, some names that we're trading are at all-time highs, like TSM, like Intel, right? What are some other names, right? Google, a couple names that we've been looking at all-time highs plays because they're at all-time highs. So we have to use the information that's been given to us. So at least that's what we have for some of the setups that we use. As I mentioned, when you're trading, right, the markets are always, I wouldn't say they're always changing, right? The market conditions, they're always changing. The actual setups that we use are always going to be the exact same, but you just kind of have to adapt to the current market conditions. So if the pre-market high retest is working fairly well, trading these all-time highs plays, right, you're going to continue doing that. If the market is consolidating, there's a lot of mean reversions, then we might be looking for more mean reversion setup. So that just comes with, right, execution, right, experience in the markets, right, of course, tracking your own statistics. So that's why, of course, having a trade journal is very important. As you guys know, I use TradeZella. You can use TraderSync, Notion, Excel. There's a bunch of different types of journaling softwares, but as long as you're tracking your statistics and using hard data instead of basing it off of motions, that is going to be key. Yeah, that's kind of for it for me today. A little bit of a shorter one. Just kind of want to show you guys my statistics so far for the month of January. Hopefully we can end off the month strong. I do expect a lot of volatility, as I mentioned, coming into the coming weeks with the Trump tariffs back on the table. So super excited for that. And I will see you guys all tomorrow morning. All right. Take care, everyone. Peace.